Adrian Pinto, welcome back to Acquiring Minds.
Yeah, thank you for having me. Good to be back.
Adrian, you were a guest back in February of last year, 2022, having bought a landscaping business in the Atlanta area. So I wanted to have you back on to share with us how it's going. To get started, Adrian, please just remind people a little bit about your backstory and about Georgia Scapes, the business that you bought.
Yeah, sure. So my background was really financial in nature. So I did a couple years of investment banking out of college at Credit Suisse. And then I went to private equity and worked at two different private equity firms for about 4 years. The bulk of that time spending in the kind of mid-market buyout space, specifically looking at industrial companies at a place called Greenbrier Equity Group. And after that second firm, then is when I decided to make the shift into kind of ETA and move forward with Georgia Scapes. And so Georgia Scapes were a commercial landscaping business broken up between commercial maintenance at apartments, shopping centers, businesses, HOAs, things like that. Then we have an enhancement group, which focuses on kind of upsell projects at those maintenance customers. And then we have a third division, which is what we describe as our builder group. They do the high volume installations for tract home builders. So we work with some of the big US home builders doing the sod, plant, and tree installs when they do a neighborhood. So we'll sign a contract for the life of the neighborhood and install kind of behind them every time they're completing a home.
Great. And do those customers then become recurring customers in some way, or is that really just a one and done, big, but one and done?
Yeah, so there definitely is an opportunity for that, and something I probably didn't appreciate when I took over because the prior owner never pursued it. He wasn't really a big fan of maintenance in general, which we can kind of talk about why, but that is definitely something that we have started to pursue a lot more. And so I would say at most of our install customers, we will do some form of maintenance, whether it's the whole community, it could be the model home and the spec homes that they're building. But yeah, that's something we've definitely been pursuing more, and has been received pretty well from the builders because I think they like to work with just one party ultimately.
Cool. And Adrian, give us a sense of some numbers around Georgia Scapes, if you can, and if there's been a change, hopefully a positive change, what it was today and what it was when you bought it. Start us off with what was it when you bought it?
Yeah, so when I had entered into the LOI, it was a bit under 3 million of revenue. Today we're on an LTM basis, we're a bit under 6 million of revenue,
Nice.
which is pretty exciting for about 18 months.
Yeah.
Margins, I would say they were higher, candidly before I took over, in large part because the prior owner kind of wore several hats himself, which we can get
Classic
into.
story.
But that was something I think I probably, underappreciated and frankly under diligence just how involved he was and what might be needed, rehiring, when to replace him. And so, adjusting for that or factoring that, and then kind of adjusting for some one-time stuff. Our margins are, probably low teens. I would say is probably pretty accurate.
Great. Thank you. Doubling revenue, essentially, even if your margins are a bit less, sure sounds positive. Give me just a high level, how you feeling, and if you want to grade it on 1 to 10, go ahead and do that. This was a big life decision, and you got off traditional finance path and into this small business ownership path. Reflecting back, was it a good move?
Yeah, I mean, it's interesting because I think at times it's hard to take that step back and look at it holistically and say okay, look how the organization has changed, look how we've, developed our customers, we've grown grown the business financially, and when I do that, I think it helps me frame what's gone on. And I think I feel frankly more positive about the situation. I think it's easy, or at least for me, to get caught up in any one, thing that might be going on that you're kind of trying to solve a problem. And then, that causes stress or whatever. And then that frustration that kind of builds through that. So I think when I look at it, overall, it's definitely been a positive experience, both because of the just overall outcome to the business, but also I think personally, I cannot, I guess, oversay how much you learn, just ultimately doing this relative to being in an investment role, right? I think when you're in an investment role, you look at things very theoretically, and you learn to calculate things the way that essentially the books tell you to calculate them. And then I think when you're in this seat, you learn like how it actually works in practice and how different that is. And so, one thing that I've realized at times as I've reviewed like other businesses or given advice to other people or talked to some of my friends still in PE is like, I think my perspective on just like business value or evaluation has developed like dramatically for the positive, you know what I mean? And it's probably made me, I think, a lot better, you know, investor or just, general kind of, viewer of businesses, which is, I think, kind of like an anecdotal positive of this whole situation, but, something that I didn't necessarily anticipate occurring as much as it has.
That's fascinating. Well, Adrian, part of your backstory was that you, in your roles in PE, saw there's just kind of this great kind of anecdote where you saw these blue collar guys who'd built enormous businesses and sold, were selling them for, I think, like 9 figures, and
Yeah.
and you said to yourself, they there hadn't been some master stroke, some genius at work. They just kind of been growth oriented and been at it for a long time, and there they were, multi millionaires. And you said to yourself, "Well, that looks fun, and I feel like I could do that." Do you feel that observation of yours was accurate, or do you feel like you were maybe oversimplifying it? Now that you're in it, you're like, "Wow, it's even more impressive what they built," or is it basically all intact? Like, yeah, that's still the plan.
Yeah, it's a good question. I mean, I think probably both. I mean, I think I probably underappreciated some of the difficulties, certainly, with doing it, both in terms of just like, the process of, going out, finding these businesses, buying them, like it takes a lot of work, certainly. I think I've also probably underappreciated like the dedication it takes to stay in the same business for 30 years and do that. Like in all of those instances, for the most part, they were people that had been doing it for a really, really long time. And so I think what I probably underappreciated was just how important it was to have that, long presence in a business. Like I think viewing it as something that could be done in 2 years in getting anywhere near those scale, I think I probably way overestimated. But I definitely think the opportunity still exists, certainly, especially if, you have kind of the right, financing structure in place or partners or whatever that is. I think the opportunity set's 100% real. I think I probably just, the speed of all of it, at least the speed doing it yourself, I think is probably where I, underestimated things.
Mm-hmm. But through acquisition, you probably still feel that you can, if you choose to pursue that path, do it faster than the 3 or 4 decades that it took some of these people that you were seeing.
Yeah, I think so. I mean, and that's probably in part because of risk appetite and, just how aggressive people are, on M&A. I think like I would have an ability to be more aggressive than, some of these individuals that I had met in the past. So yeah, I definitely think that is probably true. But yeah, I mean, the whole notion of like going about it yourself and trying to execute all that M&A at the same speed that we're talking about, but without, any partners or, financing partners, whether it's debt or equity, I think that part is definitely more difficult, right? Like if you're going to try to organically grow a cash base that you're going to then deploy for acquisitions, that's going to take a really long time.
Mm-hmm. Okay.
And that's in part because I think especially let's say, in landscaping, right? Like it's a moderately capital intensive industry. The margins are, somewhat thin, right? It's not software. And so the idea that you're going to be able to effectively grow your own business, right? And make investments into it, both equipment, people, all of that, while also building, the cash needed to go then acquire a bunch of other businesses, I think is difficult unless you just didn't really have much appetite to grow your business, right? And I mean, that's certainly something I've thought about at different times, which is like juxtaposing what's gone on for us, right? Like kind of doubling the size of the business with what if we didn't try to do any of that and just focused on, maximizing cash flow and using that to deploy into acquisitions, and like, what would that look like basically?
You mean, sorry, building up your own cash flow enough that you would not need a lender partner to go out and do acquisitions?
Yeah, right. Well, I think instead of us trying to maximize our organic growth, right,
Mm.
which has obviously taken money to do that, the alternative would be like, let's just try to be flat, right? But we'll, try to maximize our margin. So we'll operate as thinly as possible with as few people as possible, with, as old of equipment as possible. But in turn, we'll generate much higher free cash flow, which then we may be able to go out and deploy into acquisitions.
Hmm.
That's like, it's just an alternative route, which I've thought about, but ultimately I think for a couple different reasons have like, shied away from.
Hmm. Since we're on the topic of acquisitions, one of the things in our first conversation that we talked about was just the opportunity. I mean, landscaping is a known to be quite a fragmented industry. Suburban neighborhoods of America are crawling with landscaping businesses. And I remember you observing, landscaping trucks once you were in Georgia Scapes. It's like you'd never noticed them before, and now you see them everywhere, sort of phenomenon. Do you still feel like, aside from the point you just made about how you allocate your own capital, do you still feel like there are a lot of acquisition opportunities? Like how has that view of yours developed?
Yeah, I mean, I think the answer is yes, but I'd say like, I would say that I have tightened my scope around what those companies would need to look like, both financially, revenue profile, in order to be attractive. So I think when you and I initially had that discussion, it was probably like right when I was starting to kind of dive into the, target universe and what these businesses look like. And I've had subsequent, discussions with owners, people that I've kind of proactively reached out to who've said, yeah, I'd be open to a discussion. And I think as I've gotten under the hood and learned a little bit more about their businesses, I've seen that, their revenue mix doesn't necessarily align very well with what ours looks like. And so, if you just purely care about scale and, you don't really care about, being a pure play in any, by any sense of the word, like I think you could go out and you could buy a bunch of stuff. But I think I've been more hesitant for one reason, just because the businesses that I have thus far had those interactions with have not, had the same kind of makeup that we want or that we'd kind of desire to be. And so by buying them, it would kind of take us further away from our goals, which obviously you don't want to do. The other thing is like, obviously over the last year has been still kind of a pretty crazy time in terms of like valuations and stuff like that. And so I think in all of the instances where I've had detailed discussions with owners, right, and there's been multiple instances of LOIs put out. Really, I mean, valuation has just been a real big challenge. And I mean, I would say that like for businesses of the size that I've spoken with, I think the expectations have been somewhat unrealistic. Even by the standards of certain business brokers, I'll have discussions with someone they're representing or like a third party. I'll say, hey, I'm talking to this guy. I'm just curious your perspective. Like this is what he's asking for. And I think generally, the wants of a lot of these individuals for the size of businesses that they have just not, been tenable. So those two kind of factors have led me to sit on the sidelines thus far with the acquisitions. But I mean, I still think that that's a super important and viable, growth path for sure.
Well, I assume the other factor here is the fact that you are growing quite nicely on your own. Thank you very much. So, you've doubled revenue. So if your own organic growth looks so nice, that, removes
Yeah,
one of the other
totally.
reasons
And
to acquire. But Adrian, just to have people, anchor the time here. So when did you buy? What month did you buy?
July or like beginning of August 2021.
Okay. So basically, it's been about a little over a year and a half to double revenue.
Yeah.
You were saying?
Yeah, I was just going to say to your point on the, or, comparing versus organic growth, that's completely right. And so as an example, like there was one small business I was looking at. It was quite small, right? I think it was like 400 or 500,000 of revenue, two crews, maybe a little more than half of it was maintenance, and it was all commercial. So in that sense, it was somewhat interesting, but only interesting if you could literally just like have those crews just start reporting out of your office, like just as kind of basically an aqua hire.
Yeah.
And the issue though was from a valuation perspective, like what the owner wanted still was a lot of money. And when you start thinking about what that is actually providing you, right? So it's bringing in, so let's say $300,000 of maintenance revenue, maybe some kind of reoccurring install revenue, but you think about, okay, what am I going to have to pay for that? and what is my opportunity to just go get that organically? And I think what we've seen over the last 18 months is like what that gentleman wanted for his business. I think we could have deployed organically into, a new crew or two, and, all the other resources basically needed to go get that growth. And it would have been easier and cheaper to do so than just buying it from him, basically. So I just haven't, in those instances, it's like, it's hard to justify, even a super simple deal like that when we've been able to pretty easily get, the revenue growth, the revenue growth that we want.
Yeah. Well, I want to get into how you have done this organic growth, but first, an observation. It's just so interesting how people can arrive at such different strategies. So listening to you now, I'm reminded, I mean, it's almost like plucked from the interview with Logan and Bradley in Austin, who bought a landscaping business and struggled with it for a while. And then eventually it was a phenomenal growth and exit. But they were finance-oriented guys, and when they got into it, they had this plan to like buy $1 million of EBITDA a year every year for 5 years. So very, very inorganic M&A approach to growing their business. And once they got in it, they realized that, frankly, dollar for dollar, it was cheaper to grow organically than inorganically. It's just a better use of your capital. And so that's all they did. Maybe they did one tiny acquisition, or maybe they looked at one, but little to no acquisition, all organic growth, and very nice organic growth. Meanwhile, you have like a Mike Bodkin, who has been on the podcast a few times, and Mike is very acquisitive, and so and appears to be doing it well, and doing it more. so just totally just interesting. But and Mike Bodkin is also in landscaping. So two young sets of acquisition entrepreneurs, both in landscaping, but taking very different paths. Just an observation.
Yeah.
Adrian, let's hear about your organic growth. So how, in brief, how have you doubled revenue in 18 months?
Yeah, I mean, I would say it's been a combination of things, right? So, candidly, there has been growth with our existing customers, which obviously, like, I have little to do with that. I think that you could argue like our team's ability to serve them properly helps, kind of support those relationships and continue to funnel work to us as they take on new properties or whatever that may be. So, the customer service side of things, certainly, but I would credit obviously the team with that more than me. I think for me, like what my big focus has been is like when I took over the business was identifying kind of what I felt like were areas of weakness in terms of our revenue profile. So, we were very light on maintenance when I took over. We had some customer concentration on other sides of our business. And so for me, I wanted to kind of look at each one of those individually and come up with a strategy for how do we tackle that. So if you take the customer concentration part first, right? So the biggest thing there was identifying who would be other customers that would fit that division, and then figuring out who are the kind of decision makers at those customers, getting contact information and just, outreach. And in that instance, it was somewhat easier because there was, we knew kind of who that universe of customers were, right? If you think about like the big builders in the US, there's let's say 40 of them or something. And so we were able to kind of, pretty easily kind of scope out those customers and figure out who we should be, in contact with, and devise a plan to kind of go after them. And then on the maintenance side, that side is more of kind of just a land grab because the universe is enormous. And so there the strategy was more around who are the types of properties that we would want, and then who are the companies that either manage or own those types of properties, and then who at that company, again, would be the decision maker. So an example on the maintenance side was apartments have been something that we've always been really strong at in terms of our customers. And so what we did was we joined the Atlanta Apartment Association, which sends out a booklet of all of the apartment owners and their buildings in Georgia. And so from there, now I have a list of, I forget, it was, hundreds and hundreds of buildings with, dozens, if not 100 apartment owners. And so I could take that information, I could use some of these online resources to look up those companies and get a list of their employees, which I think they aggregate from like LinkedIn and whatnot. And they even have emails for those employees. So once I was able to do that, all I had to really figure out was like who at these places is actually going to make the decision, which as I came to find out with apartments, it's almost always the community manager. And so I would then send mass outreach to these community managers, basically saying who we are, what we do, and ask for either a call or an introduction meeting. And once we had that, it would give me a chance to kind of talk about who we're currently serving, and so they could see like, hey, we serve some of your competitors. We do a good job there. Here's some examples. And then, if they were interested, basically they would be, they'd say, come give us a quote. We'd like to see, some pricing for our landscaping, basically. And basically what I found was that, for every 100 emails I would send, I would get about 4 or 5 responses asking for, quotes to be given. And then our close rate would be maybe 20 or 25%. So if I sent 100 emails, I would get, we'd get 1 new win out of that. And certainly there's no telling, like there are no guarantee the size of that win, right? So sometimes it would be a huge property and sometimes it would be a tiny property. But what I found is that, I can send 100 emails really easily with this whole kind of strategy. And so I would send, 1,000 emails, maybe once a month. That would, that 1,000 emails would give us, I don't know, maybe 10 or 15 or 20 different, meetings for proposals and whatnot. And we'd close a handful of them. And so just kind of staying on top of that and just recycling that process has been pretty successful for us. And it's not even just been on the apartment. That's where we started on the apartment side, but then we've shifted it to being in the HOAs, and we've won HOAs through that, which generally I would say in landscaping are kind of the gold, the gold standard of customers. We've won some businesses, shopping centers, all sorts of different properties. And I feel like every time I redo that strategy, there's, hundreds of new contacts that, we could reach out to, because obviously those types of positions are, they're shuffling in and out people all the time. So it's pretty, endless, I would say, in terms of the opportunities.
2 quick reactions. I mean, when you say 1,000 and then you say endless, I mean, there aren't literally endless amounts of
course.
So, are there really more than 10,000 apartment buildings in Georgia? Probably. Well, but more than 20,000?
Yeah. So if you just looked at apartments, agreed, right? I think once you start bringing in all the HOA property managers, all the commercial office property managers, the shopping center property managers, banks, doctors' offices, all this, right? I mean, there are tens of thousands, I would say. But I agreed, right? Like there is a finite number. I think one of the things that I've realized though is, as I was mentioning, is like they really, those positions change pretty frequently. Like if I go look at one apartment today and then I go look 4 months from now, it's pretty common that they will have a different community manager at that point in time, which doesn't mean that you have any more likely chance of winning the contract, but it does give you another opportunity to reach out. The other thing is, for at least in my opinion, like more outreach is better than less. And so even if it's the same person, I'm probably going to reach out more than once a year. So, I can kind of do this whole process and reach out to thousands of people, but then recycle that whole process all over again in June.
The same list. Yeah,
exactly. But I do think it is true to say that like it's a law of diminishing return, right? Like the more you do this, the less you're going to get ultimately. But I think what I've also seen is that by doing this and initially getting some of these relationships and winning some contracts, then you start getting that like organic, growth from the existing customers, right? Where they're like, hey, you're doing a good job with us at this one place. I'm now in charge of another one. Can you come quote that, right? And so you start developing like your own, kind of internal growth engine with your existing customers. So the combination of those 2 factors, I think, is what has, driven a lot of our growth thus far on the maintenance side.
Well, Adrian, what you're describing is basically a pretty traditional B2B sales process. Certainly anybody who's worked in, B2B software will be painfully familiar with it because this is what they do all day.
I'm sure. Yeah.
But maybe a lot of listeners kind of aren't. And the question would be like, at what point or like do you hire somebody to do that? If there's such a clear ROI and there are people, B2B salespeople who do nothing but this all day long, When does it make sense for you to invest in a full-time human to do this for you?
Yeah, I mean, I think that's definitely something I think that's in the cards probably for this year, especially just because obviously there's a lead time required before you start really seeing any success from a new salesperson. I think the reason we haven't done it thus far is just that one, it hasn't been that it hasn't been that much of my time as I was mentioning, and two, we've just allocated kind of our spend on hires elsewhere that have felt like bigger needs. And so if this means I have to spend a little bit more time on this each month, so far I think that has made sense. But I agree. I mean, I think as you get bigger and in order to keep any similar level of growth, right, like you're going to need that much more, proposal opportunities and quote, all of that. So I think at some point in the semi near future, it'll probably need to be kind of a full-time position. And I completely agree. Like, I think this is another example of something that someone in this industry or someone in sales would look at what has occurred and say like, yeah, that's pretty obvious. I think for me, coming from, my background and, I had never done anything like this before. And so this was all kind of trial and error that, led to us kind of putting in place this approach.
Yeah. Well, I'll pat you on the back, Adrian, for essentially inventing a B2B sales process. It was already out there in the world, but you discovered it all on your own. And just because you didn't know about it and then figured it out, a lot of your competition, not searchers, but 50 and 60-year-olds whose businesses, who you're competing with, probably really don't know about this. So it's a way for you to pull ahead as well, right?
Yeah, I mean, 100%. I mean, I think that like the mom and pop owned businesses are absolutely not doing this. I think the ones that are the ones that are big enough that they have some form of sales, in place. And then, we were competing against them. But even there, I mean, I think that there are things that we can use to our advantage, whether that's maybe being a little bit more creative in our approach or, I think I'm a pretty like communicative person. And so if we get an opportunity to do something, I'm going to respond right away. I'm going to meet them right away. I'm going to follow up right away. And I think, for the feedback that at least that I've gotten, I think is that people have appreciated, this kind of middle ground we play in where it's like, we seem to have the resources that support a larger organization or at least make us come off as our larger organization, but like with the nimbleness of kind of a smaller team. And I think that's something that, you're not going to find if you're at Brightview or something like that. Right. So, and I think that, me being involved in the process a little bit, I know, and I've been told by some of the customers we've landed, I think is appreciative, by them because they kind of see like, oh, I get to deal with the owner. That seems like that, probably means that I'm going to be taken care of a little bit more. So anyway, I think, us kind of flexing how we're perceived by the customers, whether it's as a big team or a small, lean, nimble team, I think can, be used to our advantage also.
Yeah. Yeah. And to the point about hiring somebody for a BD, like a full-time BD person, like their conversion probably will be a little bit less than yours because people do love to work directly with owners. So you're probably going to convert customers just a little bit better than the person you hire to do it, but who knows?
Yeah, but on the flip side, like there's a lot of things that I don't do, which I think a traditional salesperson would be doing, right? Like I don't attend industry meetings, and I'm not where they might have a lot of like apartments there. There's a lot of, I think, stuff that like a dedicated salesperson would be doing, whether it's just, drop-ins at apartments or, places, all of that stuff, right? Like I'm not doing that. I mean, truly, I'm kind of doing, I would say, the bare bones and just kind of focusing on like that back office, high volume outreach, just because it's something that I can kind of easily do without a lot of, hours spent on it. So I think that that's where having a dedicated salesperson will be a big asset for us because it'll allow us to, I think, have a little bit more kind of comprehensive sales approach.
Adrian, we've been talking about landscaping indirectly a lot now. Just give us a 2-minute lay of the land of landscaping. You mentioned, that it's kind of there's this bottomless pool of customers. That's good, but of course, the barriers to entry in landscaping are also extremely low. It's hard to build a moat, very competitive. So, kind of address those two things. And then also the commercial. Well, why don't you address that, and then I'll have some follow-up questions because I got about 3 of them here. So that one first,
Okay.
please.
Yeah. So I mean, I do think it is largely a bottomless pool of customers, especially when you're in a larger city. You know, like I said, I mean, I think there's obviously rankings of customers, right? And so if you're going to be super selective and you're going to say, I only want the highest quality, world of Coca-Cola, right? Which would be like one of the kind of top properties in all of Atlanta. If that's all you're focusing on, then you may have a difficult time, winning new business. I think if you're willing to kind of cast a wider net and say anything that's commercial where there's kind of a centralized property manager I'm open to, then I think, yeah, I mean, I think it feels endless, to be honest. And again, if we were doing this for 10 years and had been, we were 10 times the size, maybe at that point I wouldn't feel the same way, but like where we are right now, it feels endless. And in terms of the competition component to it, I mean, I think that is true, but it's not necessarily the case on commercial stuff as much. And that's not necessarily because, all of the long tail of mom and pops wouldn't do commercial stuff. I think the barrier to entry really is that a lot of commercial things, especially as they get more and more reputable, they want some form of credibility with their landscaper, right? So if you're a pretty high-end apartment, or if you're an HOA, or if you're a decent sized shopping center, they're not going to take, Adrian Pinto landscaping with his one truck just because the price might be a favorable, right? They're going to say, well, what else do you do? Oh, you just do a handful of homes? That's not interesting to us. I think where we're like, one of the things that's been really helpful for us and was even more helpful in the beginning was going to these meetings and being able to list a couple of our key customers who the prior owner had established relationships with. Like if we didn't have those initial relationships, I don't think we would have been able to build off of that. But since we did, and we were able to build off of it, now it's that much easier because now our list of customers is quite large, and it spans a lot of different management companies and whatnot. So I think the barrier to entry on the commercial side is that kind of initial reputation and kind of resume of properties. And once you're beyond that, I think at our size, like for your average property, we can compete just as well with Brightview or Russell, who's a huge person here, or Yellowstone, because your average property doesn't really need all of this extra kind of sophistication that those guys might offer. Now, again, if it's World of Coke, I mean, I would be, candid to say that like I think it would be difficult for us to win that versus one of those guys, because there is a lot of process and systems and stuff that they have in place that I think if you're a huge customer that's paying $1 million contract, like they're going to want, which we aren't quite there yet. But I think for our kind of sweet spot of customers, like we can just as easily compete, and in some ways I think better, because as we were talking about, me being involved a little bit, or some of our kind of the nimbleness of our organization, I think can help us in those instances.
Well, and let me just make a shout out here for acquiring a business, as if I need to on this podcast. But what you described about the value of the resume of the roster of businesses, of clients that you already had, and how that got your foot in the door. A lot of times the question in this world can be like, well, what are you buying really in a business? And in landscaping in particular, because in theory, despite you just kind of showed how it's not true, but in theory, the barriers to entry are low, and somebody can, hop in a truck and have, go to pick up, $1,000 worth of equipment at a Home Depot and be in business. But what you're buying is reputation, your existing customers, and of course, cash flow, and, the resources to do stuff immediately and to pay yourself immediately. But that client roster should not be understated. I mean, that's extremely valuable. Just repeating what you said back to you, that's kind of the engine that's allowed you to one of the engines that's allowed you to really kind of get some more clients. So,
yeah, I mean, 100%. And I that's definitely not something I thought about when I got into this, to be honest. Like, I think if I would have seen the initial maintenance book and it would have been just, let's say, all random banks, right? Like, something where you're just going in, you're mowing, you're blowing, you're getting out of there. I don't think I would have given it a whole lot of thought versus what I bought. You know what I mean? I would have been like, oh, cool, it's still commercial. It's more properties, but they seem to make it work profitability wise. So like, great. I think in reality, if that would have happened, it would have made it that much harder when we initially started kind of getting some quoting opportunities, because they would have said, what do you do now? And we would have had to have told this apartment, oh, we do, 200 banks. And they, they're like, okay, well, that's not that applicable. So I think the book that we had definitely helped me quite a bit in those initial meetings. Just because we were able to kind of point to this and, give them pictures or tell them to drive by those places or introduce them to some of the, our customers as references. And that was, it was really helpful.
Great. More on landscaping. Commercial versus residential. So is it fair to just say commercial's better? I feel like everybody that I've talked to in landscaping is like, we can talk this to death, but like, let me just boil it down for you. Commercial's better. Your thoughts?
I think that is somewhat changing. Like, I mean, there has now been a couple examples of some residential businesses at the PE level that have done really, really well and sold at huge multiples. I think my biggest view on it is that the ratio of customer service effort or like account management effort to revenue or profit for a given customer is much worse on the residential side. So if it's your home, right? Like, and you're paying us, let's say $750 a month. So maybe it's a nice size yard. I could totally understand you as a homeowner wanting to speak with someone once a month or once every other month and ask a couple questions and maybe have someone swing out and take a look. But the reality is we have commercial customers that want less account management than that. And they're, 4 or 5 times the size. And so I think if you were to have a neighborhood of 200 individual homeowners where you actually service the homes, but you're also your customer contact was the home, not like an HOA, you open yourself up to 200 of those discussions every month or quarter or whatever it is for a relatively not huge amount of revenue for any one of those customers. So for me, that's where I struggle with the most. And one of the reasons we kind of shy away from it is just, I don't think that our processes are necessarily set up to handle that level of account management.
Yeah. Well, and I think that would be kind of one of the many conventional reasons that people like commercial rather than residential, because I don't think the work is that different. Yes, I mean, essentially, the skill set for a landscaper, the guy actually doing the work, is probably pretty similar, right? He could go to somebody's home or he could go to an office building. Correct me if I'm wrong.
I would say, yeah. I think maybe a little, on residential, they might, sometimes homeowners want to speak to the landscapers a little bit more. And so they might, you might need someone that's a little bit more commercial in that they can have that kind of interaction. But yes, work-wise, I think it's largely the same. And residential has some positives, right? Like the ratio, I think, of upsells, so them spending money on extra stuff can be better relative to their monthly maintenance bill, because most homeowners want to do something every year. I think your pricing power can be a little bit better, even though there's a lot of competition. If it's a higher end residential, they're probably going to be a little bit more accepting of, price increases and things like that. So I think there are positives, certainly. But for us, the account management is why we've shied away from it, because we have had some opportunities where people have come to us and said, hey, I'm retiring. I have $100,000 of residential maintenance customers. I'll sell it to you for, 1 or 2 times monthly, the monthly revenue. And we just have looked at it and said, like, it's not about the customers. It's just, it's not about like the price. It's just, we can't service that, from an account management perspective.
Yeah. Well, and account management's it's a very real cost. I'm just reminded of my days in SaaS, working in SaaS businesses, where these, a software product in SaaS would start targeting kind of consumers, or maybe even prosumers, as they were called. But eventually the evolution was like, it's just a better customer to go to what they would call enterprise sales, like bigger companies buying your SaaS product. Yeah. It's just a higher quality customer. They need less handholding and they pay you more. So, you win twice. So cool. Then the third point on landscaping is maintenance versus project, or there was another word that you used, design, installation. And the conventional wisdom, certainly among my guests, would be that, like, recurring revenue. So maintenance is where it's at, like more maintenance. The Austin guys, Logan and Bradley, that's how they transformed the business and really like made it into the saleable business that it was they took a business that had just a little bit of maintenance and a lot of design, installation, construction, project work, and flipped that. So tell me if you basically agree that that's the right strategy for you, and then also answer why your previous owner didn't feel that way. He didn't like maintenance. What's not to love about maintenance?
Yeah, I think that that is actually the conventional wisdom I think I've found amongst a lot of people that have kind of done this for 30 years, and they may be a bit older and kind of focused on just cash flow and things like that. Like, it's pretty common view, I think, that like maintenance, it's a pain, right? It's relative, I'd say it's generally thinner margins. The capital intensity is a little bit higher. And part of that is because on the install side, a lot of times you can use subcontractors, which means not having to, put out as much of the equipment yourself. Whereas on the maintenance side, generally that's all in-house. And then the other thing is like the operating leverage in maintenance is pretty minimal. So, a crew, if you have let's say a 3-person crew that works 4 days a week, which is pretty standard in Georgia, they can only do so much revenue, right? And at some point, you're going to need to go out and get a new crew, which means another truck, trailer, mower, etc. And that amount of revenue that they can do, like, it's not huge, right? Like, let's say it's $20,000 of monthly revenue that one crew can do. So $250,000 a year. That could be 2 contracts. It could be 5 or 20 contracts, but, so somewhere in that range. But what that means is, you could go get a new crew, you fully, equip them with everything they need. You win a couple of contracts, they have a pretty full day. And then all of a sudden you win 1 or 2 more things, and all of a sudden they can't do that. And so now you have to go do this process all over again. And so I think for companies that are growing a lot, maintenance, the negative view of maintenance is just that it's a pain to schedule. You're kind of constantly having to manipulate schedules with weather, or every time you win new properties, you kind of have to change things around. It's more people. So it's, just the labor issues in terms of finding people, keeping people, two people are out today. What are we going to do? How are we going to change things to accommodate that? And then, like I said, the operating leverage side of things where, you're not getting a ton of incremental revenue for every dollar that you're spending on new equipment, which is a challenge. But of course, all of that is juxtaposed with the contractual recurring nature of it, which is appealing to me. And I think it is a necessary balance to any business that has, project or installation work. I think the middle ground, and we may have talked about this last time, but so our business, as I was saying at the beginning, does a fair amount of what we describe as this builder work. And so to me, that the builder work is pretty clearly kind of this middle ground of what I would describe as like reoccurring, because we are signing contracts for the life of a neighborhood, right? So we win a neighborhood, there's 300 homes in it. That means for the next 300 homes, we know exactly what we're going to make per home for as they're building those. And generally these neighborhoods are built, let's say, over 6 to 12 months. Let's say if it's 300 homes, maybe it's longer. But you kind of know the speed that they're building at. So maybe it's 1 a week, or maybe it's 2 a week. And so you actually do have some visibility into what your weekly or monthly revenue is going to be on that community. And you also have visibility into how long you're going to maintain those levels. And so unlike, a traditional kind of general contractor project where it's, hey, we bid on this, we want it in 6 months, it's going to start, it's going to take us 3 weeks, and then we're going to finish. And we have no idea what we're going to do afterwards. This is definitely closer to the maintenance side, because there is an element of visibility and consistency and all of that with the work. And I've found it to be a pretty appealing. I mean, there are challenges with it, right? Because there's more material costs and all of that than there is with maintenance. But I found it to be a pretty attractive side of things, and like I said, a good middle ground where it's not necessarily maintenance, but there is a ton of opportunity there, and that's been a driver of our growth as well.
Very interesting. Okay. So maintenance has its problems. Other than the low margins was known to me, but these other ones I hadn't considered or heard. Yeah,
the labor thing's huge. I mean, I would say almost every single person I've talked to that's been in it for 20, 25, 30 years, they all grasp about the same thing, which is like, oh, it's such a pain. Like, having to, handle, people being out, and how am I going to have to move things? And I got to call customers and say, I can't do it today because it's two people, that side of things, it really is
But
a logistical
but Adrian,
challenge.
don't those things also occur in projects? Same thing. A guy doesn't show up for work, and so then you got to talk to your client. It's a project-based contract as opposed to recurring.
Sure. If it's like sure, but if it's a 1 month installation, let's say on like the far other end, right, the GC side, if it's a 1 month installation, someone being out any one day, probably not having a huge impact on the overall scope of the project. Whereas if your crew leader is out on a day where you have to go to, an HOA, and the other two people on the crew might not have driver's licenses, or maybe they just have less experience, whatever it is, that one person being out could screw up the whole schedule. And then all of a sudden you have to shift that back a day and tell his other two guys, hey, you can't work without him because you don't have enough experience, whatever that is. So I think that the relative impact is higher in maintenance. The other thing is on the project side, like I said, if you're subcontracting any of that work, you're not really taking that, that risk, or that, you're not necessarily being burdened by the pain of one person being out on a crew, because it's really up to the subcontractor to go find someone else.
Yeah. That's great. Just a couple more questions, Adrian, then we got to wrap. I think I have 3 more questions here. One thing that I have, it's only recently occurred to me to ask is when diligencing the quality of the work that your crews do. So, what if you when you got into the business, did you find that your crews do good work? Because isn't there a chance that you find you get in and it's like, oh, we're actually like we do shoddy work. And just to your point about how you were like, the existing book of business allowed you to say to prospects, go drive by this property that we do and see the good work that we do. Well, there are landscaping companies that don't do good work, and you might have bought one of those. So is there a way to diligence the quality, especially as an outsider? Now you know landscaping, but when you were buying this business, you didn't. The actual quality of the end product or end service that the business you're considering delivers.
Yeah, no, it's a great question. I did not look into that. And in hindsight, I think that is certainly important. Now, I think that there's ways that you can, or there's data that you can use that kind of correlates to that, right? So like if let's say you have a high quality customer and you've had them for 15 years, I think the chances are you must do pretty good work, right? But nonetheless, like I definitely think in hindsight, it would be worth saying, first, obviously I want the maintenance list. I'm going to drive by some of these properties and just see how they would look. I also want some examples of some projects that you've done. I want examples of stuff that's been in-house. So I know the in-house guys, how they've done it, not just, stuff that maybe subcontractors have done. And I think, spending a little bit of time and looking at those, I think definitely would be important. I think for me, when I got in, I did, drive around to properties and I would see, how our stuff looked, and, felt like even with a naive eye, it seemed like, okay, this looks pretty good to me. So, that gave me some peace of mind. But there's definitely been, a couple instances early on where maybe we got a customer call about something and I didn't understand the dynamics of like, oh, it's, fall and there's obviously a lot of leaves. But if we get a customer call and they say something about, a leaf issue, and all of a sudden I'm like, wait a minute, are we doing this wrong? Are we not doing what we're supposed to be doing? But that's just because I didn't really understand what was going on, right? And so I think as I've learned the industry a little bit more, I've learned to understand like if a customer ever says something like, is it a normal thing? Is there a reason for it? Is it our fault? Is it someone else's? And that helps. But the good news overall is, I would say that our team is pretty strong and does really good work.
Good. When we talked in our pre-call, I asked you, would you buy the same size business before? Typically, people are always like, bigger would have been better. Bigger's always better. And we know that going into acquisitions. And then once you're on the other side of it, you really know it. But you actually you agreed with that. But basically, you had a slightly different take on that question and thought it focused on the wrong thing. Do you recall?
Yeah, I mean, I think, and correct me if I'm wrong, I think my perspective on it was around um, want like basically making sure that the business was of a size that had the necessary people to kind of replace the prior owner and kind of be run on its own, I guess, kind of going forward without the prior owner's
Exactly.
involvement. Because I think what I found was like from a size perspective, it was what I was looking for at the time. But then as I got under the hood, post close, I found, oh, well, the prior owner was doing this and maybe he was a bit involved in that. And those are things that I'm not necessarily capable of doing without, committing 100% of my time to it. And so we're going to need to go hire someone to fill this void. And then as a result, all of a sudden, from a financial perspective, like, you have less earnings than you thought you were going to have. So
And that's precisely what happened to you, right? I mean, you get in there and you're shadowing the owner. You've already bought the business. You're shadowing the owner. After a couple of days, you're like, what was it? Like, I'm not sure I'm going to be able to do all that. So tell that
day
story.
3, I truly probably think Monday and Tuesday of that week were like the most stressed I'd ever been, because it was apparent from literally hour like 2 that the prior owner did everything for a part of the business. And I shadowed him, went to some customers, I saw him interacting with his customers, and I was like, I'm not sure that I'm going to be able to replace him. Like, it was in our, one of our more construction oriented groups. And it was, just something that I have no familiarity with. And yeah, I mean, it was just apparent, like, I'm not going to be able to replace him with this. And so I had texted him basically the third day, and I was like, I'm not sure that I'm the right person to kind of replace you in this part of the business. And he was basically like, yeah, I've kind of been thinking about that too. I have someone that I think you should meet. He's got a great background in that area. And I met him, and he's great. And we hired him, and he's been a great hire. But it wasn't something I was anticipating. And so then when you think about what the now kind of pro forma earnings look like, it's, less a high level manager. And so I think in hindsight for me, when if I was going to review a business to determine, is it an appropriate size? I think the really key thing would be to make sure you unpack, like, does it have every single hire that you're going to, or employee that you're going to need in a, post-close universe? And if the answer is no, then, you should look at the earnings adjusted for that. Despite how you figure out valuation and everything, like you're going to need a certain, size of earnings, and you better make sure that this business will have that adjusted for, the hires that you need to make. I just fortunately got really lucky that in addition to, or while all this was going on, our business also just started kind of taking off. And we were getting a lot of growth on kind of every side of the business. And so financially, we were able to support that new hire. I think on the flip side, like, if things would have gone the opposite way and we would have had a kind of a struggling, period of time post close, financially it would have been tough too, because all of a sudden we're burdened by this extra head. So it worked out for me, but that's definitely, I think I told you, I mean, there's definitely some areas where I look back and I'm like, wow, that was a risk that I took that it maybe worked out okay, but like, I'm not sure I would take that risk again. And this is probably one of the biggest areas where just, not having 100% clear point of view on what the owner did and whether I could do that, turned out to be a challenge, although we figured it out.
Do you recall any of these other high risk risks?
Yeah, I mean, I think doing an asset sale, right? Like having to go to some of these customers post close without speaking to the customers pre close in a business that has customer concentration is a huge risk. Because you're basically just making a bet that they're going to say, okay, no problem, I'll keep the business with you. And we did lose one customer, and it was a pretty big one. We fortunately grew with enough other customers that it didn't matter. But it was, again, had we not grown those other customers, it would have been a sizable impact. And it was purely because they said, well, I was friends with the prior owner and I don't know you, and I know other people in this space, so I'm going to take my business to them. It's like, okay. And it could have been a lot worse, frankly. So, that, I think that's one area, again, in hindsight, where I look back and I'm like, I understand why I took the risk, but like, I don't know if I would take that risk again. I mean, that's a huge risk. Another smaller risk, but another one is just like on asset quality. I think I just kind of took the, prior owner, he said, oh yeah, everything's in working condition. And, we, obviously you could see in their financials, they're spending a bunch of money on repairs. And he was pretty candid about that. Like, it's not new stuff, but, it works. And I haven't been lying to you about what we spend in repairs or anything. And so I, again, was like, okay, well, I know what I'm getting into. And then I think I got there and I was like, came to find out from talking to employees and stuff that like, oh yeah, like, these three things have barely been working for years. And, so that's just another area where it's like, I took a risk of just kind of going with it without having a mechanic go in, evaluate things, figure out what is that true cost going to be post close to either fix stuff, repair it. And, it worked out okay, but like, there were some of the costs that we incurred post close, I think could have potentially either been avoided or been maybe adjusted in purchase price because the quality of the assets was maybe a bit under what I was anticipating.
And an owner seller would be open to that, right? While they might not be comfortable introducing you to some of their biggest customers or to the employees even, they should let you audit the assets, right?
Yeah, and honestly, he said he would. So it wasn't that he was hiding it. It was just that, like, amongst all the other diligence streams I was doing at closing, I just didn't honestly get around to having someone go there. I'm not sure how amenable he would have been to purchase price adjustments because, one mechanic said these things need to be fixed or whatever. But he definitely was open to allowing, me to go. But yeah, the customer thing, I understand why his perspective is like that, but he did not want that. Same with the employees. And again, I understand that, but I do think that that's also a risk because, if you're buying a business with one kind of key manager, let's say, aside from the prior owner, if that person leaves, like, you're in a tough spot. Now, in my example, he spoke with her. And so she, he verbally told me that she was comfortable with it. But I had no assurance of that. So all I could really do was, kind of put on the charm post close and make her understand that like this is a great thing for everyone, and she's going to get there's going to be a pay increase, and I'm here to support the business and do everything I can and help her any way I can. And fortunately, we have a great relationship, but like that also pretty big risk.
Sure. Adrian, let's wrap with a final question. Earlier, you had talked about how the process of going down this path, buying this business, has made you better at really evaluating drivers in a business, small business overall. Whereas from your perch in PE, it was now reflect back that it was kind of more academic. You really have a instinct for things now. Overall, in addition to that, what muscles would you say you've developed, and what muscles have atrophied?
Yeah, certainly the sales thing for me, right? Because that's never something I've had to do before. That's not a component. There's relationship components of private equity and investment banking, but there's not like, outreach and sales and things like that. So that's completely new for me. And I think that components of the kind of financial analysis that I do on a daily or weekly basis is different. Like truly getting in and understanding all components of cash flow. And as you said, like being able to kind of anticipate what the month or quarter might look like based off of kind of higher level factors that are occurring. So customer demand is doing this. What does that might mean? What might that mean for, cash flow over the next few weeks? I think I've got a much better feel for that stuff now. I think on the flip side, so things that have atrophied, like I do a fair amount of, Excel kind of financial analysis now. I'm not doing, true like modeling, and, that type of stuff as much anymore. And certainly things more related to like the debt side of things. So, private equity type debt, bigger company issues that, they just don't affect us. And so I have not been involved in, kind of debt modeling or anything like that for quite some time, which I'm sure if I was trying to get back into, like I'd have to, kind of relearn components of. But I'd actually say, and this may just be my personality, but I've been surprised how much, Excel stuff I still end up doing, because I maybe am, like I said, forecasting cash or trying to, review different numbers or whatnot. And then I end up kind of, getting into Excel and spending a lot of time there. So I would say that I haven't quite lost those skills yet.
Do you feel like you've earned your stripes as an operator, a true operator?
Yeah, I think so. So we've had a couple instances. One of our key managers was out sick for a month in November. And that was an example or a time where I was like, I basically just was a divisional manager of a landscaping company for a month, right? Where like all day I'm just taking customer calls, directing crews, helping with ordering. And I think that was something where, because we had such a strong, or that he's still with us, everything's good now, but because we had such a strong manager in that division, I, didn't really have to be that involved, right? And I probably took that for granted at times, and maybe was too uninvolved, to the point where like I didn't have my stripes, as you would say, like, you know what I mean? Like if he was out, it would have been difficult for me to replace. And then all of a sudden I was forced to replace. And I think the first week was like drinking from a fire hose, learning all the dynamics, understanding customer issues, all this stuff. But then by the end of the month, I think, in looking back on it, I think it was, a good thing for me personally, just because it allowed me to understand so much more of that division. It allowed me to, I think I appreciate things a lot more, that he deals with now. Also, I think it allowed us to have an outside perspective on how we were doing things. And we've actually like made some changes to our processes and stuff coming out of that, where like, he was so in the weeds for so long that he, didn't take the time maybe to think like, hey, how could we improve certain things? I all of a sudden was thrown in for a month. And by the end of the month, I was like, I don't not know why we're doing, this like that, or like how we're scheduling certain things. So like, we got to improve some things there. And he was, when he came back, he was totally on board. He's like, no, you're right. Like I hadn't thought about it, but it makes total sense. So I think it's been good for all parties involved. But, that's an example of a time where like, I, definitely would say that I earned my stripes, in this business. So.
Adrian, if people have questions, what's your preferred way that people reach out? LinkedIn, Twitter, email, what do you like?
Yeah, I mean, I'd say, I'm pretty responsive to DMs on Twitter, LinkedIn messages. People can send me an email directly. I'm always happy to chat. I think, honestly, one of the coolest things coming out of our last discussion, Will, was just the network of individuals that I've been able to build. Both people that have just reached out to me proactively, like, hey, I heard you on this podcast. People that, I know you've introduced me to has been great for me. I mean, so I think that's like a pretty awesome, kind of side element of everything you have going on with this podcast, which is just like, it cultivates a huge network of people. I was talking to a guy the other day who just closed on an acquisition in Nevada, and he was asking me things about our business, and his is not in landscaping, but I was telling him, I was like, listen, I would find someone, even if they're only 4 months further down the road than you, like find someone that has done an acquisition in your space, because like, it's like dog years where, 4 months of someone's being further down the road is like 3 years. And so what you could learn from that person is incredibly high. And I've been able to pick up on, from people like Mike or, others that you've introduced me to who are, a few months or years past me. It's like, I think that's a huge resource for people. So, I'm a big advocate of that. So anyone that I can be helpful with, whether it's landscaping or just, S&B in general, I'm more than happy to talk to. But I definitely suggest people find other people to speak with, for sure.
Yeah. The concept of a peer group, I feel like it's in the air. I mean, it's always been valuable and always been well known for people who have had them, how valuable they are. But I just feel like in the last month, I just been hearing this mantra, peer groups, peer groups, peer groups. So, an important point.
And I think it's partially because it's like people, especially with like the actual like closing of the deal and stuff, it's so similar, what everyone goes through. And so like in that, those discussions, like what I've gone through, I can have that discussion with someone, and in my experience, it's so applicable to them because it's such a similar process. So yeah, I mean, I feel like this is an industry, SMB in general is just something that is like really, it makes sense, completely to have that peer group.
Adrian, thanks very much for coming back on, sir. This has been an education, as always, when talking to you. So thanks very much for your time. We're about 35 minutes over our 30-minute mark, but it was every minute of it was worth it. So appreciate all the time you've given me.
All right. Well, I appreciate it. Thanks for having me on.
I hope you enjoyed that interview. Make sure you subscribe to the Acquiring Minds channel below. We are now publishing twice a week. So tons of new interviews and stories to come, stories that will help you along your own path to acquiring a business.